What's happening, everybody? This is Vaughn Greathouse. I'm back here with Jonathan Arnold, and today we're going to talk about investment properties. All right, John, awesome. Thank you so much for coming back, man. It's good to have you.
Yeah, I mean, we survived the polar vortex.
Yeah, we did.
Happy to be alive and thawed out and everything.
Yeah, it get brutal, man, for a minute. But yeah, I wanted to take some time, and I appreciate you coming on again. It's always good to get information from you on investment properties and doing an investment loan. Typically, a lot of the people that I work with have just paid cash. So it hasn't really been a lender involved. But when it comes to the loan part, what would you say is the most common type of loan that an investor or someone who's looking to get into investing is going to take out?
There's three primary types.
Okay.
Private money is basically exactly how it sounds. Some private person is lending money. It's a great way to buy a property in not great condition. Portfolio loans is one step above a private loan where they're generally offered by banks, but the bank has their own guidelines and are set up again for unique situations where there might be a property condition issue.
Okay.
The most common type of financing would be conventional financing, which is insured by the federal government, and I would say probably 90% of investment properties purchased with financing are getting a conventional loan.
Wow. Okay. Well, that's good to know, especially going forward and people who are thinking, because I had a couple clients ask me about it. What do I need to do to get started and what can I expect? So it's good that I can give them some information. So I had a couple more questions down here. What should you expect as an investor generally for a investment loan versus a primary home mortgage?
Generally speaking, you're going to see slightly higher interest rates because it's a higher risk loan for the bank.
For the bank, right.
Usually you're going to see a higher down payment requirement.
Okay.
Generally starting at a minimum of 15% down.
Okay.
And for multi-family homes, it's a little bit more than that, usually around 25%.
Okay.
So usually that's the biggest difference between purchasing as a primary residence and investment is down payment.
Okay,
it's
perfect. And I was talking to Stephanie earlier, and she had mentioned something about a reserve amount.
Yeah, so the bank on an investment property wants to know that you have some money left over in an account somewhere.
Right.
And so it could be a retirement account, it could be an investment account, 401k, savings account, whatever.
Okay.
You don't have to use the money. They just want to see that there's a couple months worth of payments left over somewhere that if God forbid something happened, you're not using every single penny that you have to get into this place.
Okay, got it. That makes perfect sense. Now, as we're going through the process, say where you're helping me, educating me, what would you say is the biggest aha moment or the biggest learned item that comes from, helping some investors get through the process?
That it's possible.
Okay.
Because I would say 50% of first-time investors do not think that they have the income to qualify.
Wow.
And the interesting part about the way a loan works on an investment purchase is that we get to actually use future rental income, even on properties that are vacant, to offset that payment.
Wow.
So buyers can purchase investment properties with a lot less income than what they might think. So that's probably the biggest aha is that, we get through the conversation and they're like, wait, so we can actually do this? Like, yes, we can do this.
That's great, man. That's great. And it's always good to dig into it. And I know we always go back to this, but we, start the conversation, see what's available. You don't have to make a move, but if you're interested, just shoot a question out and let them know, hey, let them know ahead of time, hey, I'm not looking to do anything, but at least getting the conversation started is key. What I ended up doing, John, was I took all the multi-units and investment properties in Kent, Allegan, and Ottawa County. There's about 160 something here listed that I'm going to add that into this video, maybe on the bottom link or up or top, but somewhere you'll be able to get a hold of these. If not, just shoot me a message and I'll make sure you get them. Some of the opportunities that are available. And if you have any further questions as far as your specific situation, give John a call, give me a call, it doesn't matter. But at the same time, we just want to provide a lot of value for you guys. Any last things you want to throw out there, or?
No, it's always a fun conversation. Just learning what you can do that you know, maybe you don't use it now, but maybe next year.
Okay.
You know, and what can you do to build up and get ready?
There you go. There you go. Just getting started. Preparation.
That's right.
No, thanks, John. I appreciate you coming on. Again, this is Jonathan Arnold. This is Vaughn Greathouse, greathousefinder.com, applywithjohn.com. You guys have a good day. We'll see you.
See you guys.
All of the